You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. I know you people out there like to sling a little bit of VIX, a little bit of maybe VXX, a little bit of maybe some S&P implied or realized vol. Take your pick, maybe some OTC vol, all of the above. We don't judge here. Some variant swaps, whatever your method, your poison, your weapon of choice is in the vol space. We welcome you all. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we think so, Options Insider Radio Network. Quite a bit for you guys to choose from. So if you're deep down the vol rabbit hole, we got other shows for you. Option Block, maybe talk some advisors option, what the asset managers, advisors do out there. Of course, our daily news show, tech show, all the good stuff we do. It's all mixed up there. Oh, close to about a dozen or so shows. People are asking us about crypto. Maybe crypto's coming down the pipe. You guys stay tuned for that. Maybe we'll get some. Been a lot of crypto people coming through the studio recently, that's for sure. Chicago, the new crypto mecca. So we'll see if perhaps some crypto, maybe get some crypto in the vol space over there as well. That'll certainly be exciting. Of course, however you listen, you can always join us live as well. Not just the website, not just the mobile app, not just iTunes or Stitcher or wherever else you get the show or Pocket Casts, but also live every Friday, noon Central, 1 p.m. Eastern via Mixlr, Mixlr. And you guys, once you grab that, you can join it, come in, stream it live, ask questions, all the fun stuff that's going on there. And of course, we like you podcast folks too. We don't judge. But if you listen live, you get to play along with some of the flash polls we do on social media and all the other fun stuff. Usually by the time the podcast comes out, that stuff is done. But you never know. There's always fun stuff lurking. Head on over to @options on Twitter or Stock Twits or your platform of choice. You can play along with those too. However you listen, live after the fact. Again, we don't judge. Just hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And joining me on the old Vol Views panel today, helping me view some volatility 2 weeks in a row. It's a record for the old one-eyed rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show 2 weeks in a row. I'm surprised you made it back given your, shall we say, dubious performance at the end of last week's show.
I thought, well, you know what? When you scum somebody on a trade, you're lucky to get an invite back. So it's like when you scum somebody in a trade on the floor, you know how difficult it can be. Your life in the pit for the rest of the day is usually not very good.
Not very good. It's like you turned to the guy next to you, you pennied him, then you slapped him in the face and insulted his mother. Then you expect him to be nice to you on the following Monday. You know, it's not.
And
usually
buy
doesn't
a
work.
beer. Actually, if I was in Chicago, I'd be in the office right now saying, probably raiding your refrigerator right this second for a tasty beverage.
It's a good thing it'd be you and not the meatball. You're much cheaper on our beer budget than the meatball when he comes to town. All right, now that I've said that, I might have invoked him. So let's get rolling before he hears us. It is time to dive on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Oh, that little drop. It's silly. The music is ridiculous, yet somehow it's infectious whenever I hear it. It always good thing there's no video on me. Let's just say that, because I may be boogieing here in the old studio. All right, we are of course recording this and streaming it live. It is the Vol Review, the portion where we look back at the week that was and indeed still is from a vol trading and trending and analysis perspective. Here we are recording and streaming live. We're at about a little bit past noon Central here, the one true time zone, the Central time zone, and kind of another weird day. You know, we've been saying now we're 2 weeks into this trade war, and the official leg, I should say, of the trade war, and it's pretty much been a nonstop rally. And what does President Trump do today to kind of ratchet up the trade war tensions? He comes out and says, you know what, we're not done. Maybe we'll think about adding tariffs to another, $500 billion worth of goods. So pretty much anything with a made in China label slapped on it, it's getting a tariff slapped on it, or at least they're talking about it. And what does the market do with this news, which would really slap a tariff on just about almost on most of the things you buy if you walk through the door of a Walmart or a big box retailer in America, let alone Amazon or anywhere else these days? Chances are some of the goods you purchase will be caught up in this tariff war. What does the market do with this news? It's rallying. We see green on the screen yet again. Go figure. Most of the major indices up slightly. We're not talking up 10% or anything like that, but still interesting, a little bit of just kind of a shrug. It's like, what else you got? Up 0.1% for the Dow and the S&P. The tech-heavy NASDAQ feeling the love off some good tech earnings of late, was up higher, still is up higher, about 0.3%. And all this little bit of love on the screen means a VIX Cash taking a break, heading into the weekend, 1271. I'm not liking that level, listeners, because that means the Rock Lobster may be getting rewarded for his scumbaggery by Nickel and me last week. So we shall. Do you feel proud of yourself, sir? Do you feel great delight, great joy?
Well, you know, usually when you scum somebody, there was always a reason. You usually made some money, which is why you scummed him in the first place.
You were just terrified of my unerring precision, like my third bullseye in the last few weeks out here in VIX land. It's kind of scary.
It is a little scary. You are a professional, so it's good to see that you can be right every once in a while. But I think I like the fact that we added scumming to the lexicon. I think we can use that as a verb now when you scum somebody.
Scumming, scumbaggery, lots of different variations.
Carping, all the rest.
I can do all the tenses, all the variations you want there. But your in-depth, your deep scumbaggery aside, what's catching your eye in today? Because we still got about 50 minutes. I have a chance to pull it out here. We shall see. But we should do prices right, closest without going over. So there you go. You didn't go over either, so I guess that still works in your favor. But I'll figure out something in the next 50 minutes to get me the win. Either way, go ahead, sir.
There is a skill to scumming properly. You still want to win when you scum somebody. You don't want to do it for a loss. So what this is reminding me of with Trump is like Dr. Evil, on Austin Powers. He's like, he just tries to think of a big number and then finds a bigger one. I am going to set $50 billion in tariffs. And it's like $250 billion. No, $500 million in tariffs. Which basically is what? That's a quarter of the output of the Chinese economy.
Next, he's going to want sharks with freaking laser beams. That's what he's going to want next.
I think so. So I find it funny. But I guess he's serious about trying to somewhat fix the trade imbalance we have with China. So, and we rally because companies like Microsoft are growing earnings at like 20% or something crazy like that. How can a company that big grow that much? It's and I think that is part of what that's underpinning the rally. If Microsoft can put up a big number and all of a sudden all these, far-flung tech things like, driverless cars, and people are making driverless cars, they'll just be cars driving around all connected by solar, and NVIDIA will power the stuff and Microsoft will do the software, and however way you want to spin it all out. I think I think, to be honest, that, market is rallying on earnings. So that everybody figures the trade wars, because the Chinese have to sell us stuff. It's $500 billion worth of stuff. We like buying stuff from the Chinese, and I'm sure we will come to an agreement at some point. I think part of maybe part of the problem too is that Chinese leader might have some internal problems. I don't know. So again, everybody forgets not a democracy, so they can be a little unstable. But I think that's where we are. So VIX at 1277. I mean, if that kind of a trade number is not getting anybody excited anymore, from a vol moving perspective, you just fade every time somebody says something about trade war. You set up a short delta back spread in a vol product and just, wait till the money comes in by the end of the day. And it's like, my gosh, it's like clockwork now. It's ridiculous. So it's not ridiculous. It's fun. So it's an opportunity, and you have to see it like that. That's what I would say on that particular, on that, at least that's what I'm seeing today. Besides just General Electric, I guess, which is old technology or old everything, just is pretty much close to the multi-year lows at this point. I don't know if GE is at the very bottom of the basement, but it's not causing any. It's not causing any. It doesn't look like it's causing any consternation anywhere. I mean, GE is. I thought they were replaced by Walgreens in the Dow, or the S&P 500. I can't remember which one. It's probably the Dow. So nobody cares. So there you go. Out with the old and in with the new, and VIX is down 10 cents on on a $500 billion trade tariff.
We're tariffing the entire Chinese economy, and the market could care less. They're like, what else you got? Let's talk some leftover World Cup news. Since you're talking earnings, we'll mix it up. We'll get to the earnings volatility a little bit first. Was going to save that for a little bit later, but what fun is that when we could get into that now? But you're right. We talked softy on the option block. It kind of coming out live on the show last night, and we were talking about how it seemed like. At the time, it seemed like kind of it was Microsoft maybe back to the, as I've termed it in the past, the resounding meh kind of phase where they put out some numbers, they're decent, there's a decent straddle price, they don't really do a fraction of that, so premium harvesters have a great time. For the last year and a half or so, maybe close to 2 years, they've kind of broken that mold. They've been outperforming, doing well. Last night they closed a little bit shy at 105. They were pricing in not quite $4, about $3.70 or so. So right around 3.5%, and sure enough, coming into today, they're up. Looks like up about $2.50 here on the after hours. So looks like they're straddled. Even though there was good news and it was good stuff, as Rock Lobster alluded, they're doing a decent job of trying to say, hey, what else can we do outside of Windows and Office, which has kind of been their big thing. Maybe trying to get the cloud going, the software as a service, maybe trying to figure out what the hell they're doing in the gaming division to make that make sense from the bottom line perspective. So a few things may be coming together over there. Not quite perhaps the bonanza that the premium lovers out there we're looking for, but still not a bad turn of events for all things out there. I know Rock Lobster, a bit of a softy bull out there. He's always has been. He's got a soft spot, shall we say, for good old Microsoft, and interesting to watch. I mentioned, too, our buddies over at ORATS do some great earnings volatility breakdowns. So if you want that, I looked at the Microsoft one, but they have, I don't know, a couple hundred names they've profiled for us on the website, theoptioninsider.com. Just search for earnings move reports or look for through our authors section, search for ORATS, ORATS. You'll see all that stuff come up. There's hundreds of names in there where they literally break it down, what they're pricing in, not just what they're pricing in now, but the previous straddles, how they've moved to this past quarter, over the past calendar year, over this past quarter, over multiple years, all this crazy stuff. It's really great in terms of free data. You guys have been asking us for years, hey, is there any good actual data on earnings straddles at performance, and now you're finally getting it. And so looking at Softy, the past projected historical move was at about $3.50, pretty much right in line with where the straddle is right now, right around a 370 or so straddle. And that's pretty much a little bit shy of what they got. Of course, intraday, they were higher, actually. They got up to 108.20, so they were about $1.40 higher there. So you add all that in, they're at about $4. So you actually had some opportunities then to do a wee bit of gamma scalping there and make it work out in your favor. So if you're long premium, you did all right, and if you're short, you're not looking too great, but you're looking better than you were, let's say, an hour ago. Also, earlier this week, we saw good old Netflix popping off. By the way, Mr. Rocklobster, you were talking on Monday's show about some of your mentees had some downside flies they put on in Netflix. How did that work out? Looks like it worked out pretty well for them. Did they close them out right away, or did they try to play around with them and wait for the stock to rally?
They try to actually play around with them. They try to close them.
Oh, good. Okay.
So as soon as it was, they tried. They got okay prices, not great prices. So on that score, it was sort of ho hum, but they got okay prices, what we would say. Okay, so so no real complaints, but it's amazing how much that stock wanted to rally back after those earnings. Kind of crazy.
You just can't keep a good content company that spends how many billions of dollars on content down, apparently. Apparently, they're not going to stop until every single human being has a Netflix account. They were pricing in going into their earnings about $35, which at the time was right around 9%. They closed right around $400 going into the earnings. They pretty much gapped down the next day right around a little bit shy of 50 handles, that down about 347 or so about 53 handles. They traded down a little bit lower than that the next day, down about 344. So you had a good run if you were indeed a premium buyer, as the Rock Lobster's mentees were there with some good flies positioned on the downside there. In Netflix, of course, the stock then decided it wanted to rally a little bit, then sell off. Right now, it's hovering right around 361. So it's still about 40 handles shy of where it closed on the earnings, but still interesting stuff. It's been an interesting kickoff here to the earnings season. It's kind of just a nice, before we dive into the deep macro river that is all things VIX and volatility, it's kind of nice to have a little bit of micro fun here on the old show. I blame the Rock Lobster getting us into the earnings first, but it's also kind of fun. Let's move on to the big stuff. Of course, VIX land, like I mentioned, the market kind of shrugging off this news of what trade war? What else you got? It has been one of the more fascinating and or stupefying things I've watched unfold in the marketplace in recent memory. We were selling off for months just on the rumor of this thing, and now that it happens, they couldn't buy it more. It's kind of funny. It's the opposite of the old, it's literally the sell the rumor, buy the fact type of thing, and that's exactly what we're seeing now. Our old friend VVIX, which is of course the volatility of VIX, it's funny. If you look at it right now, it's almost like we're kind of unched from last week. VIX is a little bit north of where we were. It's right around 12.5 coming into, a little bit higher now, about 1277 coming into the start of the show. But that pretty much almost was unched from where it was about last week. VVIX was right around 100 last week as well. So looking at net levels, it seems like we didn't really do much over the course of the last week, aside from threatening $500 billion worth of tariffs out there. So VVIX still elevated, not explosive. It's not in the 120 to, let's say, 140 range, which is when things are really rocking and rolling, but it's not hovering around 75 either. So it's indicating a wee bit of juice, but kind of has been fixated around this 100 level for a little while here, which is kind of interesting and also obviously merited. VIX has been moving, so it's not like we're just sitting at 11.99 and just watching things erode all day. That would be nice. I wouldn't turn my nose up at that. Looking at the old VIX futures out here, we're seeing a decent little bit here, seeing the cash, like I said, right around 1270. We're seeing the front month AUG futures right around 1420 or so. So we're seeing about $1.50 out there in the front month future. 2 months out, we're seeing about $14.95, a little bit shy of $15. So we're seeing a little bit more than about 2.2 handles out there in VIX future. Mr. Rock Lobster, anything catching your eye VIX futures term structure way? And I mean, it's not like it's explosive contango. It's not nothing. It's kind of in that. Would you say it's in that wee middle range?
It is in that annoying where there's no vol trade for me range is where it is.
Yeah, pretty much.
Where this August futures at 14.15, it locks up all the vol products like VXX, UVXY, whatever, take your pick, and waiting for the cash to settle back. So I would say, yeah, this is actually a trade where I would look at this to say the August future is actually relatively inexpensive with VIX here. So I would be positioning actually buying a lot of call spreads in VIX. We kind of have it on already a little bit, so there's no point of adding more of the same for the same price. And then from there, you just load the crap out of the VXX puts maybe and see what happens. See if you make any money on the trade. And that's the thing. It's very tweeny, so it's not It's not what I would call a normal allocation by any stretch of the imagination. But anytime you have compression in the curve, VIX curve, always an opportunity for VIX to maybe move. I tell clients, don't sell the first vol spike. Wait to see if there's a second. So at least as far as being able to put on a position where vol can move. So this is what I would say a junior spike. And if we close here today, actually we would have stayed, I believe, hold on. This is the first time I think this year that we have kept the whole week in zone 1 since January, I believe. I guess got to check and make sure. Little tick chart. I'm pretty sure. But I think, yes, this will be the first time, I think, that we've stayed below 13% in VIX for an entire week. So there you go. I'm just waiting for my data to come up. And yes, we have closed below 13. This will be every day. So, because we had that. We didn't close above it yesterday. So just got close, but not quite. So that is, again, an important zone 1 means generally that the market's expecting lower realized vol coming up. So if we totally fade this trade, this $500 billion trade thing, and the earnings are good, something could always make vol rise and the market, jump. But oh my gosh, I'm not seeing what it would be as of today.
So you're saying right now VIX is kind of like a zone -6 day, you would say?
-6. It is a zone. It is a zone 1 day, but I think you hear zone 1 and it is -6 to you. I think all things are, it's kind of like, what was that Sylvester Stallone movie where all restaurants are Taco Bell? For you, all zones are -6.
Yes, it's Demolition Man, actually. You're right.
Demolition Man.
I totally forgot about that movie. A fine Sylvester Stallone, Wesley Snipes film. Yes, Taco Bell is the high fine dining, which who can fault that, really? It's a fine, delicious burrito. But yes, all VIX zones at the end of the day are -6 to me. It just sounds so much cooler. I think we might even have a listener comment or question to that similar effect coming up later. We shall see. Meanwhile, let's look at what's been lighting it up out here in VIX options land this week. Kind of a light week. We're hovering right around 460,000 in the ADV, which is light. But then again, we are in summertime now. It's kind of about what you expect for this time of year. Usually VIX is going to hover in the 560, 600K ADV range. A little bit shy of that right now. And most of the days this week, actually, get a couple of oddball exceptions, but most of the rest of the days this week, not looking too strong, including today, only 138K on the tape, right about halfway through the show here. So it doesn't look like we're going to be blowing the doors off at any time soon unless our buddy 50 Cent or the old VIX whale comes in and decides to put on a ton and then roll it in the same day, maybe. Then maybe we can blow through that level. But outside of those outliers, not looking too robust. Yesterday was about 215,000 on the tape. Wednesday, 504,000. Tuesday, the big day, 866,000. So threatening a million, not quite getting there. Monday, 422,000. VIX call the put also getting a little bit heavier than it has been in recent shows. We were hovering around 2.2, 2.3 for a long time. Now it's over 3 again. I know our old buddy Russell at the Seabolt, he starts to get nervous around the 3 level. Me, I start waiting until more. It's let's say 4.5 or north of there before I start really paying attention to it. But I know a lot of people like that indicator, so we're slightly more elevated than we were this time last week. Read into that what you will. Usually that's just a result of us kind of moving around out there in VIX land a little bit more than anything else. Looking at what's dominating the VIX charts this week, the top 10 VIX strikes in terms of what's open, what's big, what's going on out there in VIX land. Again, you can see things kind of light from an OI perspective because our number one this week, usually we see at least 300, maybe 400, 500, 600,000 number one spot. This week, shy of 186,000 for our number one spot in VIX land this week. Obviously a lot of options coming off the board. The AUG 20s, 186,000 for number one. Number two, got a nice little AUG call strip going here. Number two, the AUG 30s. That 30 strike doesn't matter the month. People love it. 180,000 going up there. Number three, or I should say open there. Number three, AUG 28s, 176,000 open there. Number four, the AUG 25s, about $1.55. Number five is our first put on the list, the AUG 14s, 144,000. Number six, the AUG 21s with about 143,000. Number seven, our second and final put on the list. 114,000 contracts open there. Number eight, the comparatively reasonable AUG 17s, 112,000 open there. Number nine, now we're flipping gears to the, shall we say, less reasonable AUG 40s, 107,000 contracts open there. And winding out our top 10, kind of the Goldilocks strike in between 17 and 40. We got the 29s with 100,000 almost even open on that strike. Total, again, this is really light OI. Shy of 5.5 million, 5.4 million, about 1.3 million on the puts, 4.1 million on the calls. Usually you see VIX is going to be 7, 8, 9, 10 million open interest, no problem. So we're at roughly half of that. Again, a lot of options coming off the board recently, and also it is summertime. People are off in the south of France and doing other things rather than slinging themselves some VIX, and we're seeing that reflected in the numbers. Mr. Rock Lobster, anything catching your eye out here from a VIX options trading or trending perspective this week, sir?
I think one of the things was just, I think I mentioned it last week, just like kind of the dearth of, nobody's just interested in that big vol drop, and I think more of the same. I think part of VVIX or vol of vol, at the money vol is not very expensive, but all the upside calls are still pretty expensive. So I think there's just people are buying that stuff. I think there's been a switch in change to sort of like a little using VIX as a more backspread tool. Like, so, okay, I'm going to buy my equities. I'm a hedge fund. I'm going to buy my stocks that I think are going to outperform. And if they outperform, I'm going to make a lot of money. So then they take some of their outperformance dollars and they go buy a bunch of VIX calls or call spreads with them. And I think that's, when we're up here at these kind of, Qs are at all-time highs, I think people would rather just be backspread up there. They've learned their lesson. So that's why the upside vol gets, I think, a little priced. I think that's why VVIX is higher. I also think like for retail, it makes a call spread a great purchase in VIX because it's very easy to manage. As in, when I say manage, I usually say pay for. So because most call spreads you buy in VIX go out worthless, so you've got to figure out a way to pay for them. Anyway, so that's at least what I see of the volume. We haven't seen anything like super astounding volume-wise, but I think that's the reason why we have a little bit more vol than we normally do right now. It's like we're just we're at the top in the queues, and at this point they'll take anything they can to trade to offset that risk.
Looking at what's been going up out here, VIX options wise, like I said, it's kind of been a light week, so not a ton lighting it up. Few trades didn't trade, trends, I should say, and trades did catch our eye. We've been talking for a while. Is it really? Is it maybe, we talk a lot about sometimes trends pop up in the VIX options land. For a long time, it was that short 1x2. Maybe it looks like maybe some risk reversals. Maybe is it risk reversal season out there, particularly maybe some bullish risk reversals. I have seen a few of those popping up. Not huge size, not 50,000 or anything like that, but little decent size popping up. I saw another one popping up here. Looks like going up today. Looks like the AUG 15-16, which is a pretty tight one. Usually you don't see them that tight. Again, this went up pretty much as they want to do. Almost been market, but looks like they're buying the calls. And if I had to wager, it looks like I'd probably wager they're buying the calls and selling the puts. That's the way I'd want to put it on right now, that's for sure. 5,000 times the AUG 15-16 risk reversal again. So 5,000 lot, nothing to sneeze at out there. We also saw yesterday looks like another risk reversal going up. This one a little bit wider, more maybe in keeping what we usually see. The AUG 14-20. Looks like a risk reversal going up here. Let's see exactly splitting the uprights here, exactly mid market. But it does seem like if I had to wager on what they were doing, I'm going to wager their guess is buying that one as well. Doing that nearly 10,000 times, 9,500 times. Looks like hitting the puts for $1.35, buying the calls for 68 cents. So there have been some risk reversals popping up on our radar of late. The other thing we're seeing is just straight up call goblin. I don't know what else you can call it out there, but we're seeing, it's 20,000. SEP 30 is going up today for 51 cents. Looks like slightly biased towards buying probably, but again, those are surprisingly wide for those calls, and they like to split the uprights in VIX land, so hard to possibly tell going up right now. I'll have to check looking at it maybe tomorrow and see. But also yesterday we saw the SEP 32 halves. If 30 was too reasonable of a strike for you, 32 halves going up as well. 30,000 times for 41 cents. Looks like also probably biased towards buying there as well. So bullish risk reversals and perhaps some upside buying. I don't know, Mr. Rock Lobster. Is this the sign of the pending apocalypse, sir? Are you running out there to gobble up all the VIX upside in light of this perhaps bullish VIX paper?
One thing I also too about trading risk reversals in VIX, which is funny, is VIX for the most part is always in contango, right? So if you sell a put, you're always selling an in the money put. So my always thought is, why the heck do you sell in the money puts? So I think it's actually better just to buy call spreads and then sell the put if actual vol drops against your calls than start with a risk reversal. I don't know why anybody doesn't think of that, but so when I see risk reversal paper, I look at they really don't know what the hell they're doing. They're just loading up. So I find that all I can say as an outside comment to that, I find that humorous. I find it humorous.
Yeah, you're right. They're effectively kind of doing it that way anyway. So maybe why not just? Maybe that's why we don't see 50,000 lots going up. That's why we only see 5 or 10,000. Right. It's the toe dabblers, shall we say, in the land of all things VIX. Interesting stuff. Let's keep going on. I know there's another product out there that one or two of you out there like to trade, maybe three. It's called VXX. This is, of course, the other big vol product out there in the space. You could probably just do a whole show just based on that. I know a few people are actually doing that, so there is enough love out there. VXX kind of slightly lower than where we were again. It looks like almost like we're talking about last week's show again here, with we're about a half a handle lower than where we were this time last week, right around the 31 handle right now in VXX land. VXX averages a decent amount of paper out there from an options perspective, doing about a little bit north of 250,000 contracts a day, though this week again kind of a light week. Not much really getting north of that level out here on the old show, on the old show, but also on the old trading. Today, kind of light, only about 155,000 on the tape. $1.76 Thursday, almost 200K for Wednesday. $1.99, $1.65 on Tuesday, and 154,000 contracts open, or I should say trading on Monday. So a light week for VXX as well. So again, another sign that trade war, schmade war. We don't care. We got other things going on. Maybe we're on vacation. Again, in the aforementioned south of France. Looking at here, Mr. Rock Lobster, I bet you cannot possibly guess, if you closed your eyes and spun around 5 times, then opened them again, you would never be able to guess what the number one options position in terms of open interest size is out there right now. And VXX, have at it, sir.
You mean, could it be a position that we have some open interest in? I'm spinning. I'll say the Jan 10 puts in 2019 in VXX.
How did you ever arrive at that conclusion, sir? I don't.
It's years of market experience that I really can just drill down to that guess like nobody's business.
It doesn't hurt that you have 30% of that open interest in the Carmen Line Fund.
Yes.
That's you.
We have enough less than 1 penny options in there. So
there's a juicy baby. Hey, you got to get paid your rebate somehow, right?
Yep, we will find a way to make money on them because I'm sure we'll be able to sell something against them at some point. But it's hard for anything to get anything that has potential theoretical value and is a penny. I'd say you don't want to spend a large portion of your money on it, but you'll if we sell them for a quarter, you're never going to hear the end of it from the meatball. Never. Never,
Yes,
never.
that's true.
Never on this
That's
show.
true. You know, it's funny. I have some of those myself, and yet I almost don't want them to pay off because you're right. I'll be paying for it figuratively for a long time.
He will
just from
have
hearing
so
him
much
about
fun
it.
with that. It won't. I don't even know what. I have to feel sorry for you.
Even though, if you do look at the historical record, I'm actually the one who brought that trade up to him way back a long time ago on this show. And I remember we were talking about it, and all of a sudden he's like, because we were talking about some unusual activity on that very strike. And all of a sudden we were talking about it, and he's kind of like, I kind of like this. And then next thing I know, you guys have 30% of the OI on that one strike. I will say this, just anecdotally, I haven't crunched the numbers myself, but anecdotally, I don't think we've ever had as much audience feedback on one single trade as there has been on this. Maybe because we talk about them a lot too, that probably doesn't hurt. But people have been writing in on all sorts of different flavors of these VXX Jan 10 puts. They just cannot get enough. People don't get it. They do get it. They want more. They have bought a ton of them. I read off a bunch last week. There's probably more of, hey, what was that guy say last week? I wanted an Imelda Marcos shoe buying frenzy in these things.
I think really for them to be there, you would need like the VXX. You would need the product to be sort of heavy with a $14 future like it is now, and then trade to 10. We would need probably 2 months of that kind of activity to start to give it. You want some, besides just the regular decay, you just need something that will really send the basket down. So just all the stuff it holds, it's got to be worth less. So you want to get it down there fast. So you pick up the subsequent decay from lower levels, and so we'll see. It could happen. I don't, and I hope for obvious reasons that it does. But and there's a penny bid again today, so who knows?
And it's not you guys.
You also start seeing some other interest as well, like the 28 puts, the 27. I mean, these are puts that could be, extremely in the money by then. And if the trade war doesn't matter, I don't know what's going to – something I'm sure will make it move, but for right now, just the usual suspects are not causing any volatility anymore.
Yes, it has been fascinating to watch. I may or may not have a nice little strip of things all out there. We'll leave that up to the imagination of the listeners. It's funny. We talk about all these puts, all this downside VXX all the time. You look at what's going up out there, Mr. Rock Lobster, and it's maybe a little bit of a different story. OI-wise, the puts are all the deal, but recently, just looking at doing some cursory looking at what's been trading, it hasn't been a super heavy week, but just looking at, for example, today, what was going up today out there, we have almost 15,000, 14,000 and change of the July 81 calls, Mr. Rock Lobster, for a whopping 2 cents. And these are opening. So someone taking the opposite side of what we were just talking about. They said, puts for a penny 6 months or so out, we don't want that. We want calls for 2 cents and give us a week. So these are opening, which is fantastic. So there you go. Someone opening 14,223 times on the July 81 calls, expiring on the 27th, so about a week from now. So there you go. If that comes to pass, wow, we got a lot to talk about here on the show next week. Also worth noting, maybe there's a bit of a maybe it looks like maybe these have to be related. I can't imagine that they're not. There's also the AUG 81s going up here, so maybe a bit of a funky. Some sort of funky time spread. Doing it on a ratio too, 6,500 by 14,220. The ratio is weird. Funky calendar. He's doing it for 6 cents on the AUG. So 2 cents by 6. He's lifting the offer on those. So maybe he's trying to do some. I don't know why you would choose the 81.
You're getting a whole week for 2 cents, I guess.
If
you survive the Volpocalypse
if you survive those, yes, exactly. If you survive the imminent explosion of all things volatility that will happen clearly in the next week, then you'll be good on those 81, the 6,000 you have in August. Man, that's a good one. Why you could probably do a whole show on why you would choose the 81 strike. But instead we'll. Since we're talking VXX, I'm going to float this one up now. Why wait for the vol voicemail? Mr. Rocklops, we chatted about this yesterday. Got a little volatility flash poll for our audience out there, and we asked them pretty much. We're coining our own terms here. We don't need no stinking VIX zones. We got the erosion zone in VXX, and it's back in it right now. We know all you short vol traders out there, you're all waiting with bated breath for it to break the 30 handle. Let's just check really quick. We didn't get there today. No, we did not. We got to the low of 30.95. Now it's up on the day, so you never know what the heck's going to happen out here in VXX land. But we asked you, when do you guys think it's going to do it? When do you think it's going to finally break the 30 handle? This week, next week, the week after? Never, because you love all things vol. You like our friend loading up on the 81 strike in VXX. Let us know what you think. Mr. Rock Lobster, you weighed in, I think, last night with next week was your choice. Is that still where you're leaning, sir?
I'm still leaning there. Of course, I could never have foreseen $500 billion of trade tariffs. But I still believe next week will be the break in 30. Theoretically, I think we need to make it to go there. Actually, when we were at 12 VIX, could decay right through 30. But now VIX is elevated a little bit. I would be surprised if it held on with the same kind of news. More good tech earnings and just the same old blah blah coming out of the White House. I think we're there. You would see 29.5, 29.25 probably as low. So, which wouldn't bother me at all. I would be thrilled.
Yeah, if $500 billion in trade war isn't going to do it, who knows what's going to do it. But our audience is decidedly mixed. By the way, if you haven't voted, it's a flash poll, so it goes away quick, listeners. You got about an hour left to do it. So listen to the podcast. Fortunately, you're out of luck. If you're listening live or following along on our Twitter there, then you can get the votes in. Right now, the early voting is still kind of mixed. It's 32% for next week, which I think is a pretty rational choice. If I had to lean somewhere, I probably would lean there. 32% also for the week after August 3rd. Of course, you can go that way as well. Our friend in VXX may beg to differ, but I don't. 31% saying, no way, never. I'm a long vol guy. It's never happening. And 5% saying this week, which is probably a safe bet that that's not happening. We got a few hours left, and we're still hovering in the 31 range. So anything could happen. Weirder things have happened, but it doesn't look like it's happening this week. Really quickly, let's look out here. Some people like to talk a little bit of UVXY too, so we'll hit on that really quickly just to see what's up out there. This is, of course, the Ultra VIX short-term futures ETF. Say that 5 times fast. Trading right around 9.5 today, up slightly on the day. This is the weird. I think you talked about this before, Mr. Rock Lobster. But if you had to do the same thing, if you had to guess, and with no cheating, no looking at the show notes, because I did give you the answer. I'm a nice guy. But if you had to guess what the number one open interest position in UVXY was right now, remember, this is a neutered beast, so it could be a different story or it could be legacy position. You never know. What would you guess is the number one options position right now in UVXY land, sir?
Oh, gosh. And this was one which actually would be a guess. I have to still think it's the same type of put, and it is neutered down to 1.5, so... The 2 puts or the 3 puts? I don't even know if they're listed. I'm taking a totally wild guess.
Not bad. The 1 put.
That's what I'm guessing.
The 1 put. So I'll give it to you. The 1 put. 23,000 of those. That's a great. I don't know what they went up for. I like to dig in and see because how much you paying for that 1 put? That's fantastic. But either way, the 1 put followed by the 5 put, number 2 with 22,000, and then the Jan 30s. So these are all Jan, by the way. So the Jan 30s with 20,000. So a little bit of a mixed signals there. 23,000 of the Jan 1 puts, and then 20,000, almost 21,000 of the Jan 30 calls. So I guess to each their own out there. It's about 910,000 contracts open in UVXY. We've talked about these before, SVXY, UVXY. These things have kind of fallen off the radar a little bit post February 5th just because of the vol apocalypse, wiped out, or in this case, neutered a lot of these products. But people still trade them. Looking here today, AUG 9 puts going up about 11. Looks like a little bit of a roll here. The July AUG 9 put spread going up for 79 cents, 1,167 times. Looks like, what do we got going up here? Oh, paper maybe selling this thing. In which case, I guess it worked out for him. We shall see. 9 strike kind of close to the fire. So interesting stuff. Know what else is interesting, though, listeners? We'll get on it really quickly. Let's get to some real quick. Let's do some commodity volatility here. If I could find where we put this here. There we go. Commodity vol has been an interesting one. We talked a lot on TWIFO. By the way, we did TWIFO earlier this week, so if you're waiting for it after this show, it's already out there for you in the podcast form. So go download it, stream it wherever you like after this show, of course. Maybe moving the time of TWIFO a little bit, so stay tuned for that. But right now, crude vol, a.k.a. the crude VIX OIV, off about a handle and change, 25 and a quarter or so. You know, crude vol has already been in the toilet for a while, so whatever little bit it got is kind of getting squeezed out of it again this week. Same deal out there for gold vol, at least today, even though it is up net on the week. It was right around the 10 and handle, 1080 or something last week. So we're at about 1220. It's off about a half a handle today, but still net gold vol getting a little bit of love since last week. And there's been a kind of a bit of a drubbing out there in gold land of late. So we'll see if perhaps all of that will materialize into something interesting. Meanwhile, though, you know what always is interesting? It's your questions. So let's get to it with a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. That music means it's time for you guys to take the reins. Questions, comments, insights, pearls of wisdom, all that good stuff. We occasionally turn the tables back on you as well. We had a little VXX flash pull. That's always fun. Our big one for this week. Actually, let's play off last week's first really quickly. We asked you last week, how do you guys like to trade through earnings season? You like a short vol trader, long vol trader? You avoid it? What do you guys do? And the winner with 28% was short premium. This is through. We asked you very specifically: do you trade through the earnings event itself, or do you trade around it, or do you avoid it altogether? And 28% saying yes, you trade through the event, and you do it. You're leaning to the dark side. 27% saying you trade around the event, maybe before, maybe after, not during. And 25% saying the heck with the whole thing is too risky. And 20% saying yes, you trade through the event, but on the long premium side. So interesting little dichotomy out there. Kind of broke down how I thought. Maybe I thought the dark side might get a little bit more love, but interesting stuff nonetheless. This week we kept we're keeping, I should say, the earnings love alive, asking you guys just pretty basic question. It's earnings season. Which options names do you think will dominate your trading? Gave you 4 choices: Netflix, Amazon, Tesla, or the old Googs. Mr. Rock Lobster, you've been heavy on the Googs train this week, and you've been losing every time. Do you want to keep that train alive, or are you going to change your pick?
Well, this is one of those things where Google's what I like, but Amazon, how can you not be lured by Amazon? So I'm going to say Google for me, but I'm going to say Google on me, but I'm sure Amazon's still winning because the stocks is. If it's not going to 2,000 next week, because that's the next big number. So why the heck not?
Yeah, why not? I think we have a little bit of recency bias in our poll. Of course, Netflix came out this week too, and it's not getting the love. Amazon, 45%, sir, followed by 20% Tesla, who looks like Option God in the chat, also chiming in, says he votes Tesla. We'll get in on the poll and vote there if you haven't already, before it's gone there, Option God. 19% Googles, the old Googs. And only 16% for Netflix. No love for the old Netflix. So I thought that was kind of interesting out there. Let's look here. What else we got? So many different things. We had this guy. That's what I think that guy read in last week. Here's an interesting one. Comes from Big Dog with a W. Big Dog. He wants to know, are there any of the proprietary vol indicators out there that you guys follow regularly? You know what he's talking about here, Mr. Rocklap. So these are these ones, we kind of joke about them sometimes on the show, but seems like every house out there has to kind of come up with their own flavor of VIX because they want to have something they could market to their clients as their own proprietary indicator. Maybe they also think it's more effective. I'm sure there's something of that as well. We had the Credit Suisse people in here not too long ago. They were talking about I believe they have the one where they kind of compare the puts to the calls, how far out you have to go to buy one to offset the other kind of thing. So it's effectively a similar type thing, but it's looking at skew and everything else. So every house has kind of their own flavor. That's a long way around to me saying I don't really look at a lot of them. I mean, I'll look at them sometimes when they get aberrant or crazy, but they're not in my regular. There's enough going on in the listed stuff in our own analysis that I don't have time to pull up what the Credit Suisse or the Goldman or these other kind of indicators, what they're all saying. I don't know, Mr. Rocklaps, do you pay attention to that stuff, or is that kind of more vol noise to you?
I don't, it's always what I tell. This is because Option Pit, we have our own vol indicator for the futures curve, right? So, and it's based on a theory, and it's based on assumptions. So the theory is just the time value of money and how vol is related to time over a certain period of time. Also, it's some observation of the market, and it's a little bit of, okay, this is sort of how I think it should work. So yeah, we have an indicator for the VIX curve, and when it's pricing at a certain place. What's important about any indicator, and I think with any time you use a theoretical value trading, and it's what you probably learned well, is right, you see a theoretical value, and if you can trade around it, you have edge. So you have to understand what the value means. The fact that somebody else's VIX indicator is super low, who knows what they're looking at, right? I mean, if they're looking at the 50 handle out of the money call or the 200 and handle out of the money call, that makes a big difference. And the way volatility affects those options makes a big difference when you're comparing that indicator to another one. So what I would say is, go look at any indicator you see, understand why you make it. Do I look at other indicators? I really, I guess just because I'm an old dog and I really don't know many new tricks. To me, always the best indicator is implied volatility at the strike, and what implied volatility was at the old at the money strike, and if that is moving in any significant way, so you can kind of gauge how the curve is shifting. And what sentiment is, because it takes a lot for a liquidity provider to move volatility off the curve that it started the day on, because they're lazy. And I was a lazy liquidity provider, so you don't move stuff unless you have to or you need to. So when they are moving vol, there's always a reason, and you have to know how that plays out as far as how you trade the vol products and everything else. Of course, that's all the stuff we teach in our mentoring. So but once you start to understand those things, you could be a little bit more proactive. So do we have an indicator Option Pit? Yes, we do. Is it for public consumption? It takes a little to understand what it means, but after you figure it out, like so you could take VIX Made Easy or VXX Made Easy, and you can learn how to use it. But yeah, I think there's something in it as long as you understand what created the indicator in the first place, because I don't think any two indicators for anything you can compare, which ultimately is what you want to do. You want to see the value of one indicator over another, right? So when does one indicator really, really work, right? When the market's probably doing something in a certain way where the little blinky light flashes for this particular kind versus, another indicator like VVIX. There's a lot that goes into VVIX. VVIX isn't necessarily telling you what's happening at the money. It might be telling you a lot what's going on with out of the money calls, which I think it's probably a little better indicator of. But it doesn't tell you how cheap the puts are really. So again, depends what part of the market you're looking at when you looking at the indicator. So I probably said way too much on this topic, but I'll just leave it right there. Is understand what the indicator is actually trying to price, and then you could use it in a useful manner. There you go.
That was an impressively long-winded answer, sir. I think you've got some political office in your future. That was well said, sir. Let's see here. We got time after that answer. We got time for maybe one more. Let's go. Let's do a quick silly one. This comes from Lil Vig. Lil Vig wants to know: is VXX the greatest trading vehicle ever created? So much sweet erosion, he says. I think he's probably echoing the sentiments of a lot of our audience. I'm going out on a limb. I'm going to say yes. Yes, it is. Without a doubt. There's no arguing. It is clearly and demonstrably the greatest trading vehicle ever created. There you go. How's that? How's that for a grandiose, ridiculous statement, Mr. Rocklaps? You want to take point, counterpoint with me? You want to debate?
What I would say is it is reliably crappy as a product. And there just aren't many things in this life that are reliably crappy. There are things that are reliable, and there are things that are crappy, but not many that are reliably crappy. So on that basis alone, I would at least say VXX is an excellent trading product if you understand how it works. If you don't, you'll be like, this thing sucks. I don't understand it. So you got to know how it works. It moves like almost, except for a few other vol products, I know of very few products that act like it at all. So there you go. It's certainly unique in the way that it has
destroyed more wealth than almost all other products combined, which in and of itself
all the market value combined
then makes it kind of fascinating. All right, let's keep on rolling to our final segment, a.k.a. the Rock Lobster Scumbag segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. I got Mr. Brandt in the chat room from Durango, home of the Swan folks. They were just on the show, just did a show with them, I think, yesterday for the advisors options. Stay tuned for that, hitting the network soon. Durango, the mecca of all things options. Who knew? Durango by way of Puerto Rico. All right, let's look here. Yeah, so this is the Rock Lobster Scumbag. This is what I get for inviting him on the show last week. Last week, listeners, I made the out on the limb prediction of 1220 again. This was I was kind of inerringly, scarily accurate last week. It's been kind of my trend this year so far. It's been a good year for me on the Vol Views prediction game. This week, not so much. The Rock Lobster coming in. Neither of us really factoring in the, shall we say, the threats of taxing all of Chinese exports. So that perhaps given a little bit of a lift. We're a little bit north of where we all prognosticated. Our guest David Lincoln of the Short Vol Show was also on that, and he came in the 11 handle. He said 11.99. Thought we were going to break the 12 handle and stay there. I was a comparatively more reasonable 12.20. Rock Lobster was a far more scumbaggy 12.25, and go figure, we all lost because 12.87 is where we're looking right now. VIX kind of unched, getting a little bit more life here towards the end of the session. We'll see if that holds up or if it continues to erode to the downside. You know what, Mr. Rock Lobster? I may have to turn the tables on you. Usually, because you win, you get to go first. Usually, I could flip that on you. I could invoke host privilege for your scumbaggery and say no. But I will be nice, even though your win is with asterisks and all sorts of quotations, because not really a victory. But say la vie, I'll be nice. I'll let you go first, and maybe I'll decide to scumbag you. You never know.
See, that's what I was saying. I was like, is he going to let me go first just so he can scum me? And then he'll say, but I'm the host. I can't scum you because I'm the host. So there's no scumming when you're the host because you're the host. It's my show.
So you think. I might go down in flames just to take you with me, sir. You don't know.
I'm going to say since a big chunk of tech earnings come out next week, by next week we will be lower in VIX. So I'm going to say 12. I'm going to say 12.22.
Interesting. Disturbingly precise. Interesting nonetheless. So you're taking my last week and just adding 2 cents this time. I see what you're doing. I see the analysis that you're up to. So now here's the question. Do I want to be like scumbaggy to the downside, do 12.21? Do I want to be scumbaggy to the upside, get all that delicious upside on my own if I go 12.23? You know, I've not been known to do that. I like to make my own predictions, but it is fun to kind of twist that knife somehow. So let's see. What should I do here? That's the question. Do I want to make my actual prediction, or do I want to just you know what I'm going to do? I think I will do it. I will just twist the knife. I will take all of your VIX upside away from you, sir. I will say 12.23. So if you are not exactly accurate, you can get all that. You can get all that. What do you got? A half a handle of downside maybe there you can play with. I get all of the upside. So if our friend there, VXX 81 comes to pass, I'm laughing next week. Even though I'll be crying in the real life, I'll be laughing in the VIX crystal ball, which at the end of the day, we really know is all that matters. That's where the money is made, listeners, in the crystal ball. Unfortunately, that music means our show has come to the end, and I gotta get out of here. I gotta go see a fantastic performance coming up soon. So I gotta head out. My little man's on stage. So I gotta head out soon. But before we go, Mr. Rock Lobster, what is cooking in the land of the VIX? If I want a ridiculously long-winded indicator, where should I go?
VXX, go to our website, VXX Made Easy. VXX made easy, VIX made easy. Also, we're going to do a webinar on fixing broken trades next Sunday. Go to optionpit.com/fix, or you can click the button on special web events.
There you go. Head on over to optionpit.com to learn more. And on behalf of the meatball, or I should say the meatball, on behalf of the rock lobster, scumbag that he is, and indeed myself, I want to thank all of you for downloading, streaming, and subscribing. And of course, for tuning in live. We love you guys too, and sending in your questions and all the fun stuff that you guys do. We love you all. We'll see you next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.